Yo, what's up, guys? Welcome back to the night shift. I'm back here with another trade. GCAD is the trade that I took today. Let's get into it. So, rule number one is that you want to be looking for buys because you are above this purple line, which is the 144 exponential moving average. If you're beneath the purple line, you're looking for sells. So in this case, we're above, so rule number one is met. Now, rule number two is that you want a sort of quote-unquote a structural shift that is supporting your buy or your sell. In this case, we have price making this high low, making a low here and then making a high, which this is the kind of structural shift that you need. Price then pulls back and then you can buy over here. It makes a higher high, it pulls back, and then we can then buy anywhere in these regions. So that's rule number two. You actually want this structural shift to the upside, supporting the direction in which you want to trade. So I am stuck in this low and this high, and I can buy during this complex pullback. Now, rule number three is the fact that we need peak center pass. So in this case, we have the peak of the pullback from here. Price pulls back to this downside, it pushes back up, then it does a middle section, which is called the center point. So I can move my red line up until there, and then price then comes back down here, comes back up. I'm waiting for price to pass this area with a full candle closure. It fails to do that, it pushes back down, and then at this point, after this failed break, I then move my center point to here. At this point, I want my pass candle to happen at this area. So price pushes back down, pushes back up, tries to push back down. Then my center point moves to there. Then as price pushes back down, you guys will see that this green candle right here is the one that then pushes back up and closes above the base of those two candles. So this is then my center, and this is then my pass candle. So you have your peak, you have your center, and then you have your pass candle. So that's rule number three. But with rule number three, you do want two criteria to be met. The first criteria is that price needs to actually make a pass candle during a specific time frame. So the time frame that this pass candle happens is at 1400 chart time, as you guys can see down here. The pass candle needs to happen between 9 o'clock up until 5 o'clock p.m. chart time. It happens during those two times, and first criteria for the pass candle is met. The second criteria for the pass candle is that you want this pass candle to actually happen while the Ehlers fissure, which is this solid green indicator down here, you want that to actually be beneath this 50 level. Once this Ehlers fissure is beneath and you have a pass candle, then your pass candle is valid. Now at this point, we have our two criteria being met, so we can actually go down to the 15-minute to look for an entry. So on the 15-minute, this is our pass candle, this 15-minute candle which opened at 2 o'clock up until this candle that closed at 3 o'clock. So my entry model is that price needs to come back down and touch the yellow line, which is my 50 exponential moving average. It needs to come back and touch this line, and then the second criteria, once it's touched that line, is I need to come back down here at the bottom and look at my dotted line. This is my Ehlers fissure. The dotted line is my RSI. So as my RSI hovers around here at the top side, I'm waiting for my RSI to actually come beneath the 50 level. And then once it comes beneath my 50 level, as you guys can see, price comes back down. NFP hits at this candle, which sweeps all the liquidity beneath here. My dotted line then goes above my Ehlers fissure, which is the solid green line. At around this green candle, I take my first entry. So for my entry, I'm waiting for the RSI, which is this dotted line, to come beneath my 50 level, to come also beneath my green line, which is the Ehlers fissure, and then go back above the Ehlers fissure, or to go back above the 50 level. So I wait for this candle closure, then I took my first entry. Took my first entry here. I put my stop losses 31 pips beneath, which, yeah, I agree it's a wide stop loss, but because we have NFP, you can expect to have a wide stop loss. And then I took my TP to be around 50 pips at this high, and price then shot up, retraced a little bit. So that's the trade that I took around NFP, and I hope you guys found some value in this. I will put down the rules of this trade down beneath in the description, and I hope to see you guys on the next one. Cheers.